Hey, it's Joshua here with Mortgage Clarity, and today we're going to talk about VA loans. Kind of a quick overview of the highlights of VA. This is probably my favorite program. I love VA. I like their mentality behind how they do underwriting, behind how they do appraisals and stuff. So this is a great program. Now, VA, you do have to be a veteran eligible for your VA benefit, and that's something a lender can actually verify typically much faster than the veteran can for themselves. And we get what's called a certificate of eligibility, and this will be a confirmation that the VA agrees that the vet meets the minimum requirements. Now, if that doesn't come back automatically, then we can get things like the DD-214. Typically that's enough, but sometimes, particularly for reservists, there's more documentation. But again, your lender can usually make this much easier for you than if you try to do it on your own. So if you're interested in finding out if this program works for you, if you're eligible, again, work with a lender who's knowledgeable with VA, and they'll get you started. Now, VA does a lot of things that other programs will not do, but it's important to note that just because VA will allow for these things to be done does not mean that the lender you're working with will allow it. For example, VA is fine with manufactured homes, but many VA lenders will incorrectly state that VA does not do manufactured homes. And really what it is that they don't do manufactured homes in the VA program, but the program does allow for it. So what is it I like about VA? It's probably gonna be too many things to get kind of in this video, but let's just talk about some of the highlights. One is it's nice with the 0% down program. So it's a great program with 0% down and no monthly mortgage insurance costs. So that can help keep things low. Now, with VA, they do have what's called the upfront funding fee. And this is a one-time fee per loan in which is charged to the veteran, but can be added to the loan amount. So it's not something you have to come up with as far as cash to close, but you are paying for that. Now, if you have 10% disability rating with the VA or more, then they waive that fee, and that really makes this a fantastic program. As far as if you don't have that 10% disability, then what that fee will cost will vary quite a bit on whether or not this is your first time use or second time use, whether or not you're putting 0% down, 5% down, or 10% down, and then are you regular military or reserve military? So I won't go over in this video all the different down payment requirements, or not the down payment, the upfront funding fee requirements in this, but just note that those are applicable if you don't have it. So, so often if you're a borrower with good credit scores and you're putting down 5 or 10% down, even though you might be able to use your VA loan, you might want to look at conventional, because conventional, while you might have that mortgage insurance, you're avoiding that fee. So just something to talk with your lender about and dive into. So some great things about VA. Again, when it comes to properties uniqueness, I think VA is the easiest to get unique properties done. Manufactured homes, dome homes. I mean, VA will do some pretty great things with it. Their main concern is this home a suitable living environment for the veteran? And can the appraiser find suitable comps to support marketability? So again, if you wanted, again, an off-grid home, VA would allow for that. Doesn't mean your lender will, but VA would allow for that as long as the appraiser can show that that's common for the area. They can find other off-grid homes and the home is suitable for the veteran. VA will do twice move manufactured homes or manufactured homes older than June 16th, 1976. Pretty much impossible to do on the other mainline loan programs. So that's great. So one limiting factor with VA is it is only for the veteran and the veteran's spouse that they're going on the loan together. Or if there's two different borrowers and they're not married, they both have to have VA benefits to be on the loan together. So this does not work if you need to have somebody co-sign for you, because it can only be the veteran or veterans or the veteran and their spouse. And it can't be where maybe your spouse is not the veteran you are, but because of credit or debt or something like that, you don't want to go on the loan. Well, if you're not on the loan, it can't happen. The veteran must be on the loan. So that's a limiting factor there. One of the things I like about VA is how they look at max qualifying payment. They're the only program that does this. It makes perfect sense, and I'll go over it to you. So most programs have just a flat, like, max debt ratio that you cannot exceed. So assuming you have decent credit and you meet the other requirements of the program, on a conventional, maybe that caps out at 45%. On FHA, maybe that's 55%. VA can actually I've done where debt ratios are as high as 69% and it'll approve it. And it's declined debt ratios that are under 30%. So what's going on here? Well, VA looks at what's called residual income. And it actually makes a lot of sense. What that means is what VA wants to know is based on the number of people living in the household, when we account for cost of living, so we take your income, withhold, taxes, what's been withdrawn from taxes. Do you have like daycare expenses? Do you have, what other debt do you have in your credit report and backing that stuff out, which is common for the other loan programs. It takes into account like maintenance costs for the home, so like 14 cents per square foot for just maintenance cost. It takes all this kind of stuff into consideration and says, okay, how much money is left over at the end of the month? And based on the number of persons in the home and what region of the United States you're in, there's a standard there. Well, if you have more than 125, 150% of the required residual income, VA can get very aggressive on what that max debt ratio will be. But if you're under that by $1, then you're going to have to reduce debt somewhere to get under that, or it won't approve it, even if you're at a 30%. And the philosophy behind this, again, makes sense. So let's just think about if you're a person who makes, say, $20,000 a month, and we compare that to somebody who makes $5,000 a month. Well, if they both have a debt ratio of, say, 30, we all know that the person making the $20,000 a month has a lot more disposable income to cover the same expenses that we all have, gas, food. Just because a person makes a lot more money doesn't mean they drive a lot more miles for gas. There doesn't mean their health insurance cost is higher, all this kind of stuff. So what VA is trying to do is say, look, if you're a borrower and you're making $20,000 a month, you, with a debt ratio of 60%, still have way more residual income to account for these expenses and surprises in life than somebody who's at $5,000 a month at a 30% debt ratio. Even though their debt ratio is lower, they don't have as much money to cover those other things. So because of that, they look at that. If you've got good residual income, VA can really push those debt ratios higher. Another thing with VA that's real nice is doesn't have a max loan limit. Conventional programs have a max limit where you just can't go above that. Otherwise, you go into what's called a jumbo loan. FHA and USDA all have max limits. With VA, if you have your full entitlement available, you can get a $1.5 million loan with no money down. And if you're a veteran with 10% or more disability, no upfront VA fee and no mortgage insurance on that loan. So it makes it very, very affordable. So it's a great program for that. The other thing with VA that's beneficial is the appraisal management system that it uses kind of avoids appraisers' ability to cherry pick. Now, in some markets, depending on how many VA appraisers are around, that can be a little bit more limiting because there's not as many appraisers that can do VA appraisals. But the good thing is when you get in these difficult markets or if you have a unique property, VA just automatically assigns that appraisal to the next appraiser on the list. And then they set the due date as far as when that has to be done. And they also set the price that the appraiser can charge, which in a market we've been coming out of here, this video here, we're in 2022. In 2020 and 21, the market was so crazy that appraisal turn times were taking a long time. And the cost for appraisals went skyrocketing because of supply and demand. Appraisers could charge more, so they did. VA sets that so that doesn't happen. The other thing that a lot of veterans don't know about VA is it's possible to use your veteran VA benefits more than once, and it's possible to have more than one VA loan at a time. And this is something a lot of people don't actually realize that they can do. So just because you use your VA benefit in the past doesn't mean you can't use it again. And in fact, if you have a house and you want to move to a different area, buy a new home and keep that home and make it a rental, VA will allow you to do that. Now, having part of your VA loan benefit tied up on another home without selling it will start to limit that. So when we talked about the VA not having a max loan limit, that's assuming you have the full benefit available. But again, if you have a home already, then it comes down to a formula, which we won't go over in this video, where based on the max conforming loan limit, that kind of starts the numbers, how much your benefits being tied up on the current home, and based on what's left over, it will tell you what your max future purchase is with no money down. And then after that, you can still purchase, but now you'll have to come in with some money on the down payment. And again, that just depends on the loan size there. So VA is a great program. If you want to know more about the VA program, absolutely reach out to me directly. Be happy to help you. If you found this video useful, thumbs up it. If you haven't already, subscribe. Again, this was just a very quick, broad overview with VA. But bottom line is, it's a great program. And if you're a veteran and you're not quite sure if you have it, reach out to Leonard. They can help you kind of find that out. And if you're a veteran and you thought you couldn't do it, use it again because you did it once years ago, now you know you can do it twice. So again, hope you liked the video. Reach out to me, like it. Till next time.